Hello, everyone, and welcome to another episode of the VMC Inc. Financial News Network. I'm Victor Campos. So let's take a look at the first trading day of 2016. It wasn't so good, honestly. We've got China weighing down global markets. But as we will see, we can take opportunities from crises. So here is our hypothetical ETF portfolio. This is a pretty safe portfolio based on ETFs, exchange traded funds, which are baskets of stocks, and basically safety in numbers and diversification is built in, so these are good ways to invest. So our hypothetical portfolio, we've got BND, VT, VTI, VYM. These are all Vanguard funds. We've got total bond market, we've got total world market, we've got US market, and we've got high dividend yield fund. So this is our basis of our portfolio. Let's take a look at today's numbers. So 1 day change, bond ended today at 80.75, VT at 56.65, VTI 102.74, VYM 65.95. And as we can see, they're all negative. Bond lost just 1%, where the other ones lost 1.68, 1.50, 1.20. So, okay, it was a bad day for the market. Looking at things in the 52-week range, however, paints a bit of a different picture. So, if we look at some of that briefly, bond were actually higher than the 52-week average, but pretty close to it. And bonds don't tend to fluctuate so much, so they're a safe investment there. VT was between 53.10 and 64.59, and again we're near the low end of the range. VTI has gone between 93 and 110.90, so we're near-ish the high end for VTI. And VYM has gone from 48.05 to 70.66, so a big fluctuation in the past 52 weeks. And we're kind of in the middle, leaning towards the high end. Well, these that we are near the low end are a great opportunity to purchase more. You want to buy low and sell high, the obvious mantra of the stock market. So if our goal is to accumulate more of these great funds, we want to accumulate them when the prices are low. Now, I'm not saying we're going to time the market, of course, because that's not a good strategy. I'm just saying that at this point in time, if I had some money to invest, I would invest in all of these funds. So let's take a look over at our holdings screen. Again, I'm using seekingalpha.com for this. So let's see, we've got hypothetically one share of each, value of $306.09. Today's gain, which are all losses actually, $3.34. So we lost on paper $3.34, 1.09%. Since our purchase, however, we've lost $11.17 and a 3.5%. If you recall from a previous video, this hypothetical portfolio was our 2015 portfolio. Looking over here, we bought one share of each of these funds on the first trading day of the new year 2015. So, we've lost a little bit of money since then, but we are going to invest starting this year, set up our baseline, and then track how our finances are doing in the long term. Because that's what the stock market is. It's a long game. You don't want to look at what happened day to day, week to week, month to month, sometimes even year to year. You want to look at it in long stretches of time, 3 years, 5 years, 10 years, 20 years. Because the data shows of 100 years of stock market data, there's been bad times and good times, but the good times outnumber the bad times. We're going to reset our values, and we're going to keep track of these ETFs for the year 2016. So I'm going to go over here and edit this. Here, These are opportunities to accumulate. So as we have our holdings here, we're starting from scratch. Let's see how our funds do throughout the days and years of 2016. We're starting off on a negative footing, but we'll see how things go throughout the weeks, months, and even years. So come back for more videos on analysis and commentary. And this has been Victor Campos for the VMC Inc. Financial News Network.